And has always got something to say. Sorry about that. I had a problem with the monitor. Oops. Let me do that. Trying to move the chat box out of the way. There we go. Click on that again. Just before we wrap up, I really just wanted to show you this. This is, I've moved to the renko, the multiple renkos, and it's just another application of using non-time-based charts. This is the renko optimizer. And you okay?
Yeah, I'm just answering Penny's.
Oh, right, sorry.
Actually, do you want to answer that? Stop. Bless her. She's just asked about the view of whether you should use diagonal or horizontal. And I was about to say pretty much up to her. Problem with,
sorry, I'm just reading your question.
It's a bit difficult to draw.
Yeah. I'll come back and answer that question for me, Penny, in a minute. Just bear with me. I promise I'll answer that one for you. Sorry, I was just picking that up from Anna. Apologies. Well, the chat box closed. I'm in full flow. I just wanted to highlight this because it's another way of looking at non-time-based charts and how they help in terms of, in this case, the renko is just a great way to smooth price action. What I've got here is the renko optimizer. I've got it in 3 time frames. These are pretty quick. This is 15 seconds, 30 seconds, and a minute. So we're sub-minute here. And I've got the equivalent up here. So basically on the renko optimizer, all I've done is I've gone in and selected the 15-second here. Just click that. I won't do it on the others, but just show you how it works. Very simple. And that just delivers your optimal brick size. You just click on that and up it pops. But the point I wanted to make about this is really this, that when you look at the timestamp along here, you've got this really nice trend that developed through around to just on 6 o'clock our time. But we've been in congestion around here. And what the renko does, and it's really, really great at doing this, is it smooths out this congestion period that we've got going on around here. Just pull this over a little bit. There we go. You know, we're going back and back and back. Here we are back to sort of 6 o'clock our time. So this congestion phase that we're seeing here, which is quite spiky. We're trading around the volume point of control. We've got lots of levels of support and resistance, you know, stronger and weaker. We've got the volume building all the time. And all of that is really just smoothed out into this very condensed chart, which removes a lot of the trading emotion because it just takes away a lot of that spikiness, a lot of that jerkiness, and it just smooths the whole process over. So in a way, it's I wouldn't say it's almost the inverse of a tick chart, but it's a kind of it is in some ways. It's more of a smoothing process. So what you're seeing with a renko is much smoother price action as opposed to you know, congestion here on the time-based chart, which is pretty quick. It's moving up and down, whipsawing around. It's not going anywhere at the moment. So that is all smoothed out. So in terms of a tick chart with a time chart, you're very much looking at it from the momentum, the inside the candle, if you will. Whereas on a renko chart, you're looking at it really from the perspective of getting outside the candle and smoothing all that out into something which is more manageable for you emotionally, which is why this is such a powerful technique to apply, where you use them in a multiple way. We're all familiar with using multiple time frames, but probably less so with using multiple renkos. But it's just as powerful, just as effective, probably in some respects even more so. You get exactly the same principles in terms of the trend dots. The trend dots move into congestion, little bit of pickup, then we go back into red, down into red down here. Now we're transitioning back again. These are pretty much the same because this is a larger brick. So we're on 6 here, and here we're on 8. In other words, we're on 8 ticks over here, we're on 6 ticks here. And as a rule of thumb, the slower the time frame. So as you start with your fastest, that will be your smallest brick size, and as you move away from your fastest down into the slower time frames, then consequently the brick size will increase automatically as you increase the time. This is on 30 seconds, so that's running at 6, and this is on a minute, which is running at 8. You can go to whatever time frame you like, but a renko, like a tick chart, is very much a scalping tool. It's designed primarily to be used in the minute time frame region, probably up to sort of 5 minute, I guess, and sub minute obviously as well. But it just removes a lot of that trading emotion. You still get the same levels, you get support and resistance. The trend monitor works in exactly the same way. And this combination of trend dots with the trend monitor is so powerful because the trend dots change first. They will always change first because they work very close to the price action. The trend monitor does not. It takes that more considered view, and again, it helps to keep you in the trade. And what this business is about is maximizing your profit from every position, because if you can hold a position through the congestion phases which follow the minor reversals, the pullbacks, we've talked a lot about primaries to secondaries, is this a secondary, is it just a pullback, which is another application of VPA. But if you can hold through those and maximize whatever it is to gain out of that trend, then your trading account will move forward, because the general reason that most traders don't succeed or struggle to move forwards, if I can put it like that, is that they're banking small losses, which we all do, but they're not banking big profits. They're banking small profits as well. So by virtue of that, and also by virtue of the fact you're probably going to have more small losses than you have small wins, your trading account is waterlogged and generally sort of is very soggy and will tend to slide lower rather than move higher. And the way it moves higher is when you get those big wins that you sit in, you sit through the emotional pressure of weight of congestion, and then it delivers. You can see I mentioned earlier on about the pivots and how we use them to define congestion. You can see this example building here. We've got the pivot high, pivot low, pivot high, pivot low, pivot high, and it's setting those levels for you as well. It's giving you a very clean idea. In addition to that, I've got the accumulation distribution on here as well. All the indicators working exactly the same way. So you're getting these levels built automatically also. So this is now developing into a pretty strong level at 62. You've got a decent platform in at 61. This is very narrow, obviously only 1 point, but the principle is the same. And you've got the pivots here, which are really just helping to tell you, yeah, I'm in congestion. In terms of a breakaway from here, pretty straightforward. And this is the other advantage of using a renko, is that when you get a breakaway from a renko, it's absolutely crystal clear cut. It's a absolute clean cut. You're not, there's no judgment involved. You're looking at 62. Once you get to 63, you've got a brick above 63, then you've got an absolute straight line through here, razor sharp, and you've got a very strong platform, and you also have a pretty clean area to place your stop loss as well. So I just wanted to highlight it for you to really explain the differences between a renko and a tick, because it's a different philosophical approach, if you will, to understanding chart construction and how you view the two, which you use in different ways really to achieve different. And there's nothing to stop you using a tick chart with a renko as well, which is equally powerful. If you have enough monitors, you can have your time-based charts, you can have your renkos, and you can have your tick charts, and it gives you everything that you could possibly want. You're getting momentum on tick, you're seeing VPA on time, and you've got a smoothing of price action on renko, which smooths your emotions and helps to keep you in through these phases. So what we're waiting for now is for a brick to build above 63, 62, 63. Here we go. I'm just looking over on the right to see what's going on in terms of the VIX. We've got the trend dots supporting, so they've moved in below. The trend monitor is still blue, bright blue, so that's nice and handy. Blue here, blue here. The downside to what we're seeing right now is that we've got volatility triggered on our time chart. So we've got a volatility, volatility, volatility. So what are we expecting on our renko? Probably some more congestion, or certainly a pause point at any rate. Once the market breaks through 64, then we should be free and clear of those regions, and we should be on up to the next level. But in terms of obviously the renko, we don't see any of that. All we see is a little brick formed, little bit of oscillation of price, and now we're starting to see that develop further. Hope that's helped to explain things in terms of non-time-based charts and give you some ideas as well. Now back to your question, Penny, which is up here. What is your view on diagonal trend line versus the horizontal ones that you use? The diagonal ones are fine. What I would say is, I know you're on the program, so what I would urge you to do is to go to the module on the technical analysis where we talk about using the pivots, because the drawing trend lines historically is all well and good, but they are historic. And what you're trying to do as a trader is to identify trends as they build in real time. And really that's what the pivot does, and that's how we tend to use it, is that you'll see some price action. Let's take a bullish trend, for example. The price action rises. you get a pivot comes in, so you're expecting a little bit of weakness. Okay, so you get a pullback. You're then looking for a pivot to the downside. Maybe you get a pivot to the downside. Now, if the price action then continues on higher and it continues past the original pivot by some way, then you know that you're still in the trend. The trend is still holding. And then what you're looking for is maybe a pivot higher at a higher level. So once it's gone past that, it carries on, then you get another pivot, then it maybe pulls back, then you get a pivot low. And at that point, maybe you then get a pivot high at a similar sort of level to the first one. And then you get maybe a pivot low at a similar level to the second pivot low. And that then tells you you're moving into a congestion phase. And then as you move away from that congestion phase, the price action starts to take off again. Let's say it's a continuation of the bullish trend. It goes on higher, you get another pivot to the upside, it pulls back again, you get a pivot low, it carries on higher. Okay, that's just a continuation of trend. That was a secondary, on up we go again. And that's really the way to understand. Now, obviously, you would then take that chart and you draw your diagonal lines on it to show the channel, which is fine. But actually what you want to see it as a trader is you want to see it at the live edge. And that's the all important difference, I guess. And I hope that in some way answers your question. Support and resistance horizontal, whether you draw them manually or whether you use the accumulation distribution or whether you use support and resistance on MT4, MT5, you know, they are traditional ways of obviously representing or delivering automatically support and resistance levels. I hope that answers that one. Nikolai, could you develop the renko indicator to automatically indicate when to change to the optimal renko size? It's something we are considering. It's something we are aware of. Obviously, when you are using it, you do have to check from time to time. The rule of thumb is very much obviously the very fast time frames. We are trading here. I checked this earlier on. Let's see if it's changed at all. What are we on here? 15-second. There we go. See if that's changed. It was on 3. No, it's still on 3, so that's fine. So just click it again. They do change, obviously, because markets speed up and slow down through the session. And a lot of traders, when they're trading non-time-based charts like renko and tick charts, they'll just set it and forget it, which is nonsense, because in exactly the same way as you see the tick activity speeding up and slowing down, so the price action speeds up. You know, momentum comes and goes the whole time. So if you want to be trading at the optimal setting, in other words, in harmony with the market, you're trading at the same speed as the market, then you do have to change it. Now, in terms of changing it, doesn't mean you change it every second or two. In terms of, you've seen, you know, we've been running what, now I don't know how long they were up there for, 20 minutes, maybe 15 minutes or so. I tend to check them every, if I'm running on these sorts of time frames, I'm sub a minute, then I'll check them every sort of 5 or 10 minutes, probably every 5 minutes or so, something like that. It's a rule of thumb. If you go past the minute and you're on maybe 2 or 3 minutes, then you tend to check them every sort of 15 minutes, maybe something like that, 20 minutes. And obviously the slower the time frame, the less you need to check them. And reset them. But yes, it's something we are thinking about at the moment. It's quite tricky, but yeah, we're always looking to update and enhance the indicators we have to try and add features. So thank you for that. I'll certainly pass that on to our development team. I know it's something they've looked at and we are considering. So thank you, Nikolai. Okay, we're on way over time. Sorry about that. Let me just flash up where you can find all the bits and pieces. These are the micro e-minis that you can find over on the CME site, so you can have a look at those for yourselves. This is the Forex Education Program. It's what we call the Complete Forex Trading Program, because that's essentially what it is. It's everything you need to know to trade Forex, from soup to nuts and everything in between. We're very proud of it. We have a lot of students on the program now. There's the private VPA chat room, which Anna and I host. We're there every day. We're happy to answer questions, and it's a very supportive group. We have experienced and less experienced traders who help one another out, and it's really, really a super room to be involved with. So we're very proud of that. This is the program. There's over 200 hours of video in here. It's everything you need to know, and I have to say a lot more. And it comes with a 7-day money-back guarantee, but we've yet to have anyone take advantage of that. And again, we're quite proud of that too. This is where you find Anna's site, annacooling.com. Sorry, that was at quantumtradingeducation.com. This is Anna's site at annacooling.com. You'll find all her analysis there, and you'll find all the books there too. They're all up on Amazon. either in Kindle or in paperback format. Finally, to the indicators, you can find them all here at quantumtrading.com. Just click on that one. There we go. MT45, NinjaTrader 7.8, and TradingView, and hopefully we're going to enhance the TradingView and bring that right up to date, because we can now do so, we believe, with the latest release of the Pine script, which is great news. So hopefully we'll have them all up and running there. TradeStation's coming along. I know it's been a long time coming, but we've got TradeStation International, which is the partnership between TradeStation and Interactive Brokers. Very powerful. If you have an IB account, you can run it through TradeStation. You can trade through a very aggressively priced brokerage, which is interactive, and you have all the bells and whistles of trading through a TradeStation platform on 9.5. And then we have TradeStation Securities on version 10, which has radar screen and everything else, which is immense. It's just a wonderful platform. That's coming along soon. I know I've said that many times before, but fingers crossed, we will be there fairly shortly. Thank you so much for coming along today. Hope you've enjoyed it. Hope you've learned something that perhaps you didn't know before. We will see you back here on Tuesday morning, 7:45 UK time, for the London Forex session. And in the meantime, have a great trading day. Enjoy the rest of the trading session. And we will see you again next week, and have a great weekend. Bye for now.